Hello everyone. I hope all of you are fine. So as I have been talking about the Indian economy in the previous week, and I have been releasing a lot of videos on the important topics. In the same continuation, today I am going to talk about the role of Indian banks in the whole economical process or economical development per se. So, be it commercial bank or be it Reserve Bank of India, they have been doing a wonderful and fantastic job in the economic development of the country, and all of us are also, active are participating actively in the banking process. So, be it money transfer or the transaction of all kinds, we have been accustomed and we are familiar with the role of the banking in our personal life, and we just cannot think of our life without the existence of the banking system. But is it only that the banks are doing, or it has got any wider connotation in the national perspective, and they have got a bigger role to play, which many of us may not be aware of. So we will be having a lot of discussion on all those untouched topic so far, but definitely, you must know because you are going to prepare for the RBI grade B to examination. You must be aware of all these minor aspects and the points, relevant points, and therefore, my request to all of you is to at least make some one-liners notes so that in future references it will be very easy for you to be able to recollect whatever you have studied in the process. So I am Professor P.K. Pathak and going to have deliberations on the whole banking process with specific reference to the role it is playing in the Indian economic development. And before actually I begin my presentation, I urge all of you to do like, share, comment, and subscribe to my YouTube channel, and keep on receiving the interesting videos on the very significant topics of the national concern. Okay. So now I'm going to share my slides. I hope all of you can see the slide. This is the topic of the day: role of Indian banks and Reserve Bank in the developmental process. So, all of you, all of us, we are aware of the banking process, at least in part. Because we have been coming across the banks. We have got many works without which we cannot do without the existence of the bank. So let us know what exactly the things are. As far as the role of the banks in development of the Indian economy is concerned, they are playing a very important role, and some of these have been already enumerated. I'll just be repeating that. First of all, they encourage people to save, and why they are encouraging? Because suppose you are having some money with you, and you know that it can grow. If you deposit it in the bank, it will grow with some speed. At least some kind of rate of interest will be receiving. So that will encourage you to not to spend that money, but to keep in the saving bank account so that it generates some interest in the process. So unwanted expenditure will not happen, and the people in general are going to cultivate a habit of saving. Then not only that, the banks are also mobilizing these kind of savings for the purpose of investment in the various sectors of the economy through aggressive banking process. So what exactly they do? They coordinate between the savings and investments and help the process of capital formation. So these are the people, these are the intermediaries actually who are coming in between or rise in between the people who are having surplus money and the people who require money for investment in their business. And in both the cases, this savers will be getting some rate of interest, and the businessmen, they have to pay a much higher rate of interest if they want to take it for investment. Similarly, it also is creating some kind of credit for the production purposes, and it greatly enlarges the production and involvement, and therefore also promotes the economic growth of the country. Foreign trade also is being facilitated through the commercial banks. A lot of facilities are being extended to the people who are indulged into the import and export kind of business. They, at the same time, these banks, they promote balanced regional development in the country by providing social, financial infrastructure and fund for the backward regions. So a few decades before it was not the case, but in the last few decades, the banks have grown much more than what it used to be. And these banks, they provide the agricultural credit and help promote the primary sectors like farmers and others. Not only that, they also help in expanding the size of the market through pumping in of the money in the market. So when the people are having money, they are going to go with the increased production level, and that is definitely going to expand the size of the market. And finally, these banks also help the governments to fulfill almost every objective of the planned economic development. So whenever the government is planning any kind of economic development being reflected in the union budget every year, they just cannot be in isolation, and they just cannot, afford to overlook the role of the banking sector in particular. Okay, so with specific reference to the RBI, let us see what it does. First of all, we should know the RBI was established on 1st April 1935, and this was a part of the development strategy of the government. Okay, and it was constituted under the RBI Act 1934, and the reason was to regularly issue the banknotes, also the maintenance of the reserves with a view to securing the monetary stability in India, and also to operate the currency and credit system of the country to its advantage. So that was the aim and the objective when the RBI was, established. So these are all the chronology of events what happened after the establishment of the RBI. It initially was established in Kolkata, but later on it was the head office, at least the central office, was permanently moved to Mumbai in 1937. And it continues to act as the central bank of Myanmar till Japanese occupation of Burma, and later up to April 1947. Although Burma got separated from the Indian Union in 1937, and even in relation to the Pakistan, after participation, the RBI served as the central bank of Pakistan until June 1948, when the State Bank of Pakistan commenced operation. So almost you can say that 10 months, less than just 1 year, the RBI was serving as the central bank of Pakistan. And this bank is fully owned by the government, in spite of the fact that originally it was set up as a shareholders bank. Okay, so these are some of the salient points. So what happened next? In the chronology of events, between 1950 and 1960, the Indian government developed a centrally planned economic policy and focused on the agricultural sector through the revolution. And in the process, the administration nationalized the commercial banks, and based on the Banking Companies Act 1949, it also established a central bank regulation as a part of the RBI. Okay, later on it was known as the Banking Regulation Act. And due to the bank crisis during those times, the RBI was requested by the government to establish a monitor and deposit insurance system. Okay, and that was primarily to restore the trust in the national bank system, and it was initialized on 7th of December 1961. RBI introduced another scheme known as the Lead Bank Scheme. That was in 1969, and the objective were to develop a structure so that it benefits the banking reaching to the poor. Also to bring the grassroots functionaries of the banks and government agencies together. And also for the credit planning, coordination of activities of the banks, etc. And finally, to oversee the flow of credit to various sectors in the rural areas, implementation of the government-sponsored poverty alleviation and employment generation schemes. So, to be precise, the central part of the control and support this public banking sector is the role that is being played by the RBI. So what happened between 1969 to 80? Almost 20 banks it was nationalized during this particular duration. Okay, and it became the central player and increased its policies for a lot of tasks like interest, reserve ratio, and the municipal deposits. So what happened next? The bank lent money in the select sectors like the agro business and the small trade companies. Later on in 1973, due to the oil crisis, there was increase in inflation, and RBI therefore restricted the monetary policy to reduce its effects. Okay. Similarly, the Security and Exchange Board proposed better method for more effective markets, and the Indian financial market was a leading example of the so-called financial repression. Another big development was the Discount and Financial House of India, which began its operation in the monetary market in April 1988. Apart from that, the National Housing Bank, founded in 1888, was forced to invest in the property market, and the new financial law improved the versatility of the direct deposit by more security measures and liberalization. As all of you must be aware, the national economy came down in July 91, and the Indian rupee was devaluated. So, and it lost almost 18% relative to the US dollar. So, post that, the new guidelines were published in 1993 to establish a private banking sector, and this was indeed a point of inflection to reinforce the market, and was often called the neoliberal policy. Also, the central bank deregulated the bank rate of interest and some sector of the financial market like the trust and property markets. The National Stock Exchange took the trade in June 94, and the RBI allowed nationalized banks to interact with the capital market to reinforce their capital base. Okay. The central bank also founded a subsidiary company known as the Bharatiya Reserve Bank Notputran Limited for producing the banknotes. Another important act, that was the Foreign Exchange Management Act, came into force in June 2000. It was aimed at improving the foreign exchange market, international investments in India, and the transactions. And the RBI finally promoted the development of the financial market in the last few years, allowed online banking in 2001, and established a new payment system in 2004 that we know by NEFT. Of course, there are many other improvements taken like RTGS and all. Okay, so we'll now see at a glance, what the RBI has done, the major initiative taken by the RBI. It has extended the banking facilities to rural and semi-urban areas. It has adopted the lead bank scheme. It established the specialized financing agencies like DICGC, the IDBI, the UTI, the NHB, and NABARD. And in order to ensure the effective operations, the RBI maintains expert staff to study various aspects of the rural credit and development. So these people are actually giving expert guidance and assistance to the NABARD, and conduct the specific studies in areas for promoting integrated rural development. It also prescribes the lending norms for the priority sectors, and the ultimate motive is to ensure better banking customer service, financial inclusion, and financial literacy initiative, etc. So, concluding, we can say that banking system in India has undergone significant changes in the last few decades. Commercial banks play a vital role, and so does the RBI, being the central bank of the country. And these are in continued process of improving on the service and the quality banking for the citizen of the country. So that's it for the day. I hope the final points of the role of the bank have already been, understood by all of you. So, in case you have got any further doubt, or in case you would like to know more about some of the relevant facts which have been stated here, you can just say so by connecting through my email ID. You can post your doubts and clarifications. I'll be happy to clarify all those things. And on that note, for today, I conclude. Hope you might have made full use of the whole knowledge sharing process, and shall be continuing to focus on each and every video that is being presented by me. So that's it for the day, and Have a nice day. Thank you so much.